You graduated without learning how money actually works. Here are 5 lessons schools should have taught you but didn't. The education system prepares you for tests, but it doesn't prepare you for real life. You leave school knowing algebra and history but not how to budget, invest, or build wealth. That's why so many adults struggle financially, not because they're dumb, but because they were never taught. Lesson 1. How compound interest works. Lesson 2. The difference between assets and liabilities. Lesson 3. How taxes actually work. Lesson 4. Why debt is dangerous. Lesson 5. How to invest for retirement. These should be required curriculum, but they're not. So let me teach you what school didn't. The education system failed an entire generation when it comes to money. You spent 12 years in school learning subjects you'll never use. But the one subject that impacts your life every single day, personal finance, was completely ignored. That's why adults are drowning in debt, living paycheck to paycheck, and unprepared for retirement. It's not their fault. They were never taught. Let's fix that right now. Lesson number 1. How compound interest works. This is the most powerful force in finance, and most people don't understand it. Compound interest means you earn returns on your returns. Let's say you invest $1,000 at 10% per year. After year 1, you have $1,100. After year 2, you don't just earn 10% on the original $1,000. You earn 10% on the $1,100. That's $110. Year 3, you're earning on $1,210. It snowballs. Over decades, this effect is massive. If you invest $200 a month starting at age 25, assuming an average 10% return, you'll have over $1.3 million by age 65. If you wait until 35 to start, you'll only have about $450,000. Same monthly contribution. The difference is compound interest had 10 fewer years to work. Time is your biggest asset. The earlier you start, the more wealth you build. Schools should teach this in middle school. Kids should see the math. They should understand that every year they delay investing costs them tens of thousands of dollars in lost growth. But they don't. So people wait until their 30s or 40s to start investing if they start at all. And they wonder why they're not wealthy, because they missed the most powerful years of compounding. Lesson number 2. The difference between assets and liabilities. An asset puts money in your pocket. A liability takes money out of your pocket. Sounds simple, but most people get this wrong. They think their house is an asset. It's not. If you live in it, it's a liability. It costs you money every month. Mortgage, taxes, insurance, maintenance. It doesn't pay you. It's a place to live, which is fine. But don't confuse it with an asset. A rental property is an asset. It generates income. Stocks are assets. They pay dividends and appreciate in value. A business is an asset. It produces cash flow. Your car is a liability. It loses value and costs you money. Your fancy watch is a liability. It doesn't generate income. Wealthy people focus on acquiring assets. Poor people acquire liabilities and think they're building wealth. Schools should teach kids to ask, does this make me money or cost me money? If it costs money, it's a liability. If it makes money, it's an asset. Build a portfolio of assets. Minimize liabilities. That's how you get rich. But schools don't teach this. So people spend their lives collecting liabilities and wondering why they're broke. Lesson number 3. How taxes actually work. Most people don't understand the tax system. They think if they get a raise and move into a higher tax bracket, they'll take home less money. That's not how it works. The US uses a progressive tax system. You're only taxed at the higher rate on the income above the threshold. Let's say the 22% bracket starts at $50,000 and the 24% bracket starts at $100,000. If you make $105,000, you're not taxed 24% on the entire amount. You're taxed 22% on the first $100,000 and 24% on the last $5,000. This matters because people turn down raises or promotions thinking they'll lose money to taxes. They won't. A raise always increases your take-home pay. But because schools don't teach this, people make bad financial decisions based on tax myths. Schools should also teach tax strategy, how to use retirement accounts to reduce taxable income, how to take advantage of deductions, how to structure investments for tax efficiency. These strategies can save you thousands of dollars a year, but most people don't learn them until they're adults, if ever. And by then, they've already lost years of potential savings. Lesson number 4, why debt is dangerous. Schools don't teach the true cost of debt. They don't explain how credit cards work, how interest compounds against you, how a $1,000 purchase on a credit card can end up costing $1,500 if you only pay the minimum. They don't show you how a 30-year mortgage means you pay almost double the purchase price by the time it's paid off. Students graduate, get their first credit card, and rack up debt because they don't understand the consequences. They think minimum payments are fine. They think everyone has debt, so it's normal. But debt is a wealth killer. Every dollar you pay in interest is a dollar that's not building your future. And the longer you carry debt, the more it costs you. Schools should teach the debt snowball method, how to prioritize high-interest debt, how to avoid bad debt and use good debt strategically. But they don't. So people enter adulthood financially illiterate and immediately make mistakes that take decades to recover from. Lesson number 5, how to invest for retirement. Most people have no idea how retirement accounts work. What's a 401k? What's a Roth IRA? What's the difference? How much should you contribute? What should you invest in? These are basic questions that should be answered in high school, but they're not. So people start their first job, ignore the retirement plan, and lose years of compounding. Here's what schools should teach. Contribute enough to your 401k to get the full employer match. That's free money. Open a Roth IRA if you're eligible. Max it out if you can. Invest in low-cost index funds. Don't try to pick individual stocks. Let it grow for decades, that's it. Simple, effective, proven. But because schools don't teach this, people either don't invest at all or they invest wrong. They pay high fees. They panic sell during crashes. They chase hot stocks, and they end up with far less than they should. Now let's talk about why schools don't teach this. It's not a conspiracy. It's just not prioritized. The education system is designed to prepare students for standardized tests. Personal finance doesn't fit into that model. There's no financial literacy requirement for graduation in most states, so it gets skipped. Teachers aren't trained to teach it. There's no time in the curriculum. And the result is millions of adults who are completely unprepared to manage money. But here's the good news. You can learn this stuff now. You don't need a classroom or a degree. You just need the willingness to educate yourself. Read books, watch videos, take courses, learn how money works. Teach yourself what school didn't. And most importantly, teach your kids. Don't let them graduate without understanding compound interest, assets versus liabilities, taxes, debt, and investing. Break the cycle. Here's your action plan. Pick one of these 5 lessons and dive deep this week. Read an article, watch a video, talk to someone who understands it. Then implement what you learn. Open an investment account, pay off a credit card, calculate how much you need for retirement. Take action. Knowledge without action is useless. And if you have kids, start teaching them now. Show them how compound interest works. Explain the difference between assets and liabilities. Let them see your budget. Make money a normal topic of conversation. The financial education they get at home will determine their financial future far more than anything they learn in school. Schools failed you, but you don't have to stay ignorant. You can educate yourself. You can teach your kids. You can break the cycle of financial illiteracy. And you can build the wealth that comes from understanding how money actually works. That's wealth mode. If this video was helpful, please click the subscribe button and then like and share with your family or friends.